Good morning, everyone. Good morning. It is Wednesday, May 26th, or May. It's July 26th. July 26th today, Wednesday, we have the FOMC. That's going to be the front and center of our news that we're going to be talking about today. But there are also some earnings, and we're going to go over a decent list of news items that have come out over the last, 20 hours or so. So realistically, we'll break all those down, and then we're going to talk about the trade plan for the day, talk about the S&P 500 futures. So yesterday, we had three major companies that reported earnings. We had Microsoft, Alphabet or Google, and Visa. So those were the three main names that reported earnings. And in combination of Google and Alphabet, the CEOs together said the word AI about 147 times. So very interesting play. Microsoft down, gapping down here on the earnings as the expected September quarter end revenue is down about $20 billion expected. So earnings per share came out at $2.69 versus $2.55. Revenue 56.2 bill versus 55.5 bill expected, so beaten both. Productivity revenue 18.29 bill versus the estimate 18.1 bill. And then more personal computing revenue 13.91 bill versus 13.58 bill. Intelligent cloud revenue 23.99 bill versus the estimate 23.8 bill. So beats on pretty much all fronts there on Microsoft. But some of the expected moves in Microsoft kind of dialed down the expectations and put a drop realistically in the name after hours and here pre-market. We talk about Google. Google beat on earnings and on revenue. I'm not going to go through them all. Other bets revenue, they beat as well. They pretty much beat on most fronts here. Google cloud revenue beats. Google services revenue beats. Where'd it go? YouTube ads revenue beats marginally. Google ad revenue beats as well. Google other revenue beats as well. Operating income is a beat on expected, and then revenue x TAC is a beat on expected. So total revenue 74.6 billion versus 72.77 billion. So big beats. Google up aggressively here pre-market, and then we have Visa as well that beat on all fronts here. Visa, another major name in the S&P. With Boeing reporting early earnings pre-market here as well, but Visa down, gapping down marginally here pre-market. But all eyes for investors and traders are going to be on Jerome Powell today. Before we talk about Jerome Powell and the Fed, these tech earnings are coming out kind of mixed results. I thought we'd have a little more better reactivity from these earnings. Of course, they're doing fairly well, but expected revenue is looking to drop off realistically, which is putting some kind of mixed results in these big tech names. So Jerome Powell in the Federal Reserve today, we have about a 98% chance of another rate hike, hiking about 25 bips, right? 25 bips expected, or I should say a 99% chance realistically. And this is going to be the last meeting until the end of September 20th, which there's an 80% chance rates stay between 5.25 and 5.5, which would include today's quarter percentage hike. So the central bank looks like it's slowing its pace of tightening, but what comes next is up for debate. So Fed Powell offered some insight into his thinking at the last month's FOMC press conference and could do again this afternoon at 2:30 p.m. when we go through the presser. The report's going to come out at 2 p.m. We're going to trade it with our live room. When we look back in June, right, it's sort of standard thinking that monetary policy affects economic activity with long and variable lags, of course. These days, the financial conditions begin to tighten well in advance of the actual rate hikes. So if you look back when we were lifting off, talking about lifting off by the time we had lifted off the 2-year interest rate. So, which is a pretty good estimate of where monetary policy is going and had gone from 20 basis points to 200 basis points. So in that sense, tightening much sooner than it's used to in the world, where news was in newspapers and not. So on the wire, it's different. This is what Jerome Powell is saying. But it's still the case that we see is interest-sensitive spending is affected very, very quickly. So housing and durable goods and things like that, but broader demand and spending, asset values, and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession of how long it takes. It's one of the main reasons why it makes sense to go to at a slightly moderate pace. So we're going to see how that shapes up. We're still pricing into the end of the year. Some people are pricing into the end of the year 5.75 to 6%. Realistically, the Fed dot plot suggests 5.6%, so that would put one more hike after this hike, realistically. And we seem like the market's kind of opening its doors to a softer landing by the Federal Reserve, right? So looking at that today, I expect to see less of a hawkish tone realistically out of the Federal Reserve. We could still have some bullishness. This market is constant bid, but I do expect to see less of dovishness overall by the Fed, maybe something muted out of the markets. But realistically, into the end of the day, if we catch a bid and we can't break through a lot of the floors, then this dovishness has succeeded and we're going to set up for another rally where there's no real resistance up above, right, for another 100 points or so. So what the Federal Reserve is doing right now, still in the tightening area, right? They haven't gone crazy, crazy tightening, but they have talked about this being a lagging effect. A lot of people are very concerned with inflation still, which I don't really believe that hardcore in, but they're concerned with rate hikes as well that are going to put downside pressure in this market and cannot be sustained for too long. However, you can see the market's reacting very positively to these things. And I can expect maybe some upside even into the end of the session, as long as some of these key areas hold out that we're going to be talking about today on the S&P 100 futures. If we start going super hawkish today, if he does something extremely hawkish, I would expect the downside to start off. I expect a muted result overall, right? Net muted result from this Federal Reserve press conference. So let's see here. To break down what we got going on here on the S&P 100 futures, we're going to be trading this event live with our trading room on the FOMC at 2 p.m. today. But what I'm seeing on the S&P 100 futures today is there was a key level over the past 2 days at 45.80, where massive traders got stuck, but more importantly, massive traders got extremely long. So I'm going to see if those buyers do step up to the plate again. Otherwise, we have a pretty decent dip that could bring us down to 45.60, another 20 points to the downside, which is the major floor I'm watching for in the S&P 100 futures today. There's still a potential bid, but I just want to keep my eyes on 45.80 and go from there. There's a temporary top here at this 45.93 area, but it's very close to price. There's a lot of bullishness trying to be built up in this market. I want to see if those 80s trade and what the reactivity is there. It's a huge pivot on the day, and I think everyone should take a look at it because the past few days, we've seen a lot of activity trading at that 80, providing order flow strength. So keep that in mind. And let's get ready for today. The FOMC is coming out. We're going to update you guys on what had happened tomorrow, but we're going to be doing it live with our trading room at 2 p.m. Eastern today. But I could expect more of a muted result realistically. I don't expect too much hawkishness or dovishness. I think he's at a state where he's very comfortable with what is going on and wants to kind of keep that flowing. And I don't necessarily think he's going to open the doors to the upside or downside. But again, it's very, very hard to predict these things, and we're going to have to see what transpires from this. I still think into the beginning stages of August, we do see some sell-side activity in this overall market, but I've yet to see it. So let's see what we got going on. We'll open up our live trading room for our traders, and we'll see you all tomorrow. Good morning, everyone. I'm just seeing these comments right now. Hope everyone has an amazing day. Expect slower movement in the futures this morning. Expect more movement around the Fed, and keep risk tight this morning. Trade smaller size. Be very diligent with that. Can Microsoft take the market down, Paul? Well, by itself, I don't think so because Google has done extremely well. We're getting a mixed result of tech movement on earnings, right? Apple's up next at some point, so is Nvidia, but I think there could be some sell side in tech over the next few weeks. I'll leave it at that. Thank you guys.